But the one energy that you talked about is probably the closest thing that I never want to say can't miss because I've missed enough times in 40 years. But uranium has all the earmarks of something that should only go higher. It is an amazing 180-degree change in attitude. When 10 or 20 years ago, any state senator, if you went to them and wanted to build a nuclear plant, they would have said, not in my state. And now those same senators goes, can you please build one and build one fast? Because we're not going to be able to reach and supply the electrical needs that this world is calling upon for where it's going in the usage of electricity without nuclear energy playing a major, major role. And we're seeing that shift everywhere you go around the world. Countries are knocking themselves almost over to be the fastest, to move towards more nuclear energy.
Think. Act. And prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome to the Money Level Show. I'm your host, Daryl Thomas, and here we think, act, and prosper. This channel focuses on changing financial trajectories and building legacies. Today, we have the opportunity of speaking with Peter Grandich of petergrandich.com. Peter is a financial advisor. He specifically worked with professional athletes in the NFL and many other sports. He also has an extensive history on Wall Street since the 1980s and has worked with multiple hedge funds. Today, we get Peter's thoughts on Americans being in over $1 trillion in debt, where the gold markets are headed, natural resources, and globalization. So as we jump into the interview, I do want to share that in the link in the description below, there's a affiliate link to the New Orleans Investment Conference, which I will share more about. But this conference is put on by Brian Lundeen, and this year they're going to have speakers such as Rick Rule, Lynn Alden, Danielle DiMartino Booth, Jim Rickards, Peter Schiff, George Gammon, and many others. So be sure to click the link in the description below so that you can join that conference. So without further ado, let's go ahead and get to the interview. Yeah, definitely. So speaking about the miners, obviously we've seen the price of gold stay pretty elevated, and I think one of the issues that we're facing is the miners aren't keeping up with the price of gold. And so I'm just going to pull up a couple of charts of, this is not financial advice, by the way. We're just looking at the price of some miners. So this is Barrick Gold. That's just the daily chart. I was looking at the history of the chart of the company. I mean, it seems like it's at levels, I mean, this was in '92 when Barrick Gold was at this level that it's currently at, and the price of gold is near all-time highs. I mean, you would think that Barrick Gold would be near its all-time highs, but it's not. So what are you kind of taking away from the miners right now?
Well, let's first talk about miners, and then let's talk about the ultimate gambling speculation, what we call the junior resource stocks, companies that are simply exploring for it and have yet to find or build a mine. Miners, as you pointed out, you would think they would be near their all-time highs because the gold price is near all-time highs. But the problem for them was during most cycles, as the gold price rose, they became heavily indebted, made very costly acquisitions. And it took a lot of years for them to get into the position that finally the top tier are in. They're producing a lot of good free cash flow, and their ability now to go out and find new resources has been shrunk on one end because most major mining companies have smaller exploration departments than they had 10 or 20 years ago. And they've become more dependent on acquiring projects in order to fulfill and replenish their resources. The good news for them and the bad news for people like me that speculated / gambled on those junior resource companies is Those companies are at the lowest levels relative to the underlying metal prices in the 40 years that I've been around them. That's just a simple response. And if you asked me 6 months ago, Pete, would you bet your life they would never be where they are today? I would have told you, not my life, but I would have bet a large sum of money we would never be at the levels we're at today. And so for me to go now and say, well, this is the absolute bottom, Darryl, and it's going to go straight up from here, I do think because of what's happened in that business, it's going to be difficult to gain any ground of substantial movement between now and year end. Too many people, and most of these juniors are owned by individuals, been too beaten up. They're just too tired of hearing the story from so many people that keep saying they should be great and they weren't. And people think in year terms. Even though the ore that they may be looking for doesn't care whether it's December 30th or January 2nd, the fact that they invest in a calendar year, they're going to want to wash their hands, win, lose, or draw between now and the end of the year. So I find it very difficult to think that there'll be a major move unless, for whatever reason, the metals market suddenly took off. There's no reason to think they will, but that would be the only thing. The good news is for those that aren't fully invested in that area or invested at all, this is the most relatively inexpensive entry point into the junior resource market for the 40 years I've been in it. And there won't all be survivors. Too many of them have too many shares outstanding and too few dollars in the bank. And they're either going to have to recapitalize or merge with others to try to make one good company out of two or three that aren't so good right now. But once January rolls around, many of these companies have also been babies thrown out with the bathwater. There are really good quality companies, but have just been annihilated with everything else. And those will be the first that will rebound. People ask, okay, well, who are they? What are they? Well, they're going to probably be companies that at least have an advanced stage project that you can put some sort of valuation on, that you can say it looks like they have at least a $3 or $4 million resource. Taken out, they should get $40 or $50 an ounce. Right now, the market's pricing it at $8 an ounce. Okay, 8 into 40, that could go up 5 times. It's worth speculating on that. But anything that's grassroots, still just trying to find something, a lot of shares outstanding, very low price with limited money, just not going to make it in this one. They're terminally ill. They're going to either be recapitalized or merged out of necessity. But the majors have no doubt now have their shopping lists out, and we're going to see a lot of acquisitions between now and the end of the year. Not for large sums of money, maybe just a few percentages over where the stocks are currently selling for, but there's going to be little defense that those companies can put up, and people are going to just be happy for a liquidity event and be able to get out of them.
Hello everyone, sorry for the break in action, but I want to tell you about the link in my description below. This is to the New Orleans Investment Conference. This conference has been around for years and have brought many people out, such as Milton Friedman, Gerald Ford, Alan Greenspan, and Margaret Thatcher. This conference is put on by Brian Lundeen and his team. Brian is the CEO of Gold Newsletter. This year, they're going to have speakers such as Jim Rickards, George Gammon, Peter Schiff, Rick Rule, Danielle DiMartino Booth, Lynn Alden, and many others. Now, I encourage you to click the link in the description below. You can choose to attend the live event, which I will likely be at, as well as the event that is live streamed. You can support the channel by using my link below, so I encourage you to check that out. Now, let's get back to the interview. Yeah. I'm just gonna share this next chart, and I have a question. So I was looking at Newmont Corp. So this is one of the big ones, right? And so we've seen that, obviously at the high of it reached I think that was close to all-time high there, close to $70.
It was, and that, by the way, is down 50% from that high. When gold right now is 8% from its all-time high, I'm just quickly in my head going like that, which is again demonstrating how much worse the shares are performing versus the underlying metal.
Yeah. Yeah, agreed. And so for people that are like new to this space, let's say, would you, if you were in their shoes, would you be looking at the big miners, the royalty and streaming? I know the expiration, that's more of a speculation rather than like an investment. I mean, I think it's what I think Rick told me it was 1 in 3,000 at some point that actually find gold or something like that. And so like explorers that could be risky or whatnot. But you can also make a lot of money, if they do hit gold. But what do you take? What if you were in the shoes of someone that's not in this space or fairly new to it? What would you be doing now?
I think you have to start at the top. In fact, probably, although the royalty, most of them have stayed pretty well strong. The royalties and streaming companies, they haven't suffered a lot. There's a couple that are fairly inexpensive, I think. But the majors, and when you think about this, I guess the argument would be this why you'd want to own a Newmont. If you believe gold's going up, and that's one of the reasons that's going to help some junior resource stock, if gold goes to what some people think, like I say, my target has been 2,500. I think in the next 1 to 3 years, we're going to see a $2,500 gold price. 1,900 now, 600 from 1,900. Not bad, it's 30 something percent. I can assure you that the average major producer will be up more than 30 something percent from wherever they are now because of the leverage then of how much more money they make for each dollar increase in the gold price. So I would say I think I would probably stick to majors, and if I'm going to play the juniors, try to find a way to be diversified in that, either a fund or an exchange traded fund like a GDXJ that owns several of them. And because you might get a rally in the juniors, but you might buy the one or two that don't work, the other eight go up, but you lose everything. Where if you would have been in a fund, the eight that went up more than made up for the two that lost, and you would at least make some money.
Hmm. Yeah, that's good to know. That's good to know. Thank you. And so another investment sector that is pretty unloved and received a beating recently is the natural resource sector. And I'm talking about oil, natural gas, uranium, and the things that we need to be on Zoom today. Right, let's say that. So what's your take on the natural resources sector? And because you want to buy things when they're cheap. I mean, many people and a lot of the bigger funds are running towards like the Nvidias and the big FANG stocks and such. And those companies are very, very overvalued, trading at many times per earnings. And such. And so like the average person, if you wanting to make, change your life, drastically, you got to buy what's cheap. And so, what's your take on the natural resources?
So oil is not cheap. Oil is trading close to its yearly high. Spoke today to I think is one of the best oil analysts that I've ever known, Phil Flynn, and Phil is calling for oil prices to go higher over time. And I concur with him. I think we make a big mistake to think that oil is stink. Uh, Natural gas is a different story, as he puts it, and I agree with him. It's going to be more influenced based on weather. We got fortunate last year, both in the US and Europe. While we had dramatic shortages, we had a more mild weather than people expected. If for some reason we get the opposite of that this year, then natural gas could have an issue. But the one energy that you talked about is probably the closest thing that I never want to say can't miss because I've missed enough times in 40 years. But uranium has all the earmarks of something that should only go higher. It is an amazing 180-degree change in attitude. When 10 or 20 years ago, any state senator, if you went to them and wanted to build a nuclear plant, they would have said, not in my state. And now those same senators goes, can you please build one and build one fast? Because we're not going to be able to reach and supply the electrical needs that this world is calling upon for where it's going in the usage of electricity without nuclear energy playing a major, major role. And we're seeing that shift everywhere you go around the world. Countries are knocking themselves almost over to be the fastest, to move towards more nuclear energy. So uranium is probably the safest. And there, what's interesting is, unlike other industries, there's not a lot of choices that you can choose where you can publicly buy into a company that makes it and develops it or profits from it. And that's why the chemicals of the world are always going to be institutionally held, because it's only one of the few ways they can do it. But there's also companies now that actually buy and hold uranium. Sprott has one. There's a couple others. That's probably the most safest play right now that I could think of in terms of principle. I would not be fearful at this point of a loss. The only thing, and this is the asterisk that you always have to know that's out there, is if there was another nuclear disaster again. So much so where people were willing to rethink all their electrical use and give up on the movement in nuclear energy. Without that, that market can only get better over time, in my opinion.
Yeah, definitely. We always have to assess the risks, and I really try to help my audience, really be level-headed about things, because, you may see like the YouTube thumbnail and the sensational titles and such, and people think that there's no bear case for any asset, which there's a bear case for all assets, I would argue. And so with nuclear, obviously if there is like a disaster or such where people would give up on it, in that case, I'm kind of trying to picture what would they replace the clean energy with, like it's
Well, that's just it. It seems irreplaceable, but you have to note that risk. We
Mhm.
just don't know how people would react. We don't know how bad of a disaster it would have to be. But outside of that, it's very hard to stop the fundamental changes in the movement towards that.
Yeah.
Uh, the metal that's not quite as safe as that, but is really back to a level now where reinvestment into it of a significant level is I think prudent for if you're investing for 20 and 24 and beyond, and that's copper. Because if you're going to believe where the world wants to go in terms of electrification and all, and clean air and all that kind of stuff, copper is a huge proponent of that. And we've not seen real money spent in a major way for years, if not a decade or more. And so there's no ample ready new supply to come on. Miners are not going to go to some of the places in the world that they would have went to 10 or 20 years ago. So it's going to take a much higher price for them to be willing to spend billions of dollars in new capex to develop new large deposits. So that's a project that, while can be dampened, copper, because of what's happened in China now and others, if you have years as your goal, not weeks, months, but years, copper has got to a price now and things related to it that are worthy in my book.
Yeah, and that's a couple points you highlighted there that really well. If you have a longer term horizon, and I often speak out against the get rich quick mentality, because majority of people lose a lot of money trying to get rich quick. And one thing I'm learning is like the patient, buy what's cheap, weight game.
So,
That's probably
Daryl,
the thing.
in the 1980s, you wouldn't pick up a research report and see it have anything less than a 3 to 5 year projection out. People at best have a 12-month projection now. That's what they consider long term. I don't plan on being this longer than a year, and hopefully a lot shorter. That has come from the addition of computers and all sorts of program trading that's not related to fundamental analysis of trying to pick a company to be part owner of, but just an algorithm or a news event that causes certain mathematical equations to be exercised simultaneously to hopefully give a superior return. That's a whole different game than when we entered the business, when 90% of the trading was by individual investors who are buying and selling part ownerships of businesses. That's not what the majority of people are doing now when it comes to financial markets.
Yeah, yeah, agreed. So one last thing as we get ready to wrap up. What's your take on globalization? We have the BRICS nations. They've been coming together. I think they have their summit coming up and such. And then we're seeing, like, when the dollar was weaponized, and we saw energy be weaponized in Europe with Russia. And then now a lot of nations are looking at their own energy security. We've had a few bills pass in the United States, but I mean, we still probably have a long way to go in terms of investment into our own energy security and such. What's your take on globalization right now?
Well, globalization in terms of where we were going to be one big world economy died thanks to COVID. One of the things we recognize here in the United States, most of the things we need were not being made here. And we were left to depend on other people, some of which are not exactly best friends. So in that terms of globalization, that died with COVID. But the BRIC nation is a completely different story. It's a scenario of countries who are coming together to either limit or eliminate the United States involvement, either as a country and or its currency. And that's a huge change. And my feeling on that is forget what's going to happen in August here now at this meeting. That's just a preliminary thing. It's not going to be an earth shattering new currency, all this type of stuff. But it's going to be set in motion now I think over the next 1 to 3 years, so much shift away from the United States with these countries forming separate trading blocs, dealing with banks not affiliated with us, this big Shanghai bank now that they're all going through, the Saudis talking about selling oil away from the dollar and also being involved and potentially becoming a member of the BRIC nations. These are all things that I believe when we see 1 to 3 years from now, we're going to see that the BRIC movement rivaled the Industrial Revolution in terms of world trade. And the United States is not going to be a net benefiter of this. And so it's not good news for the United States, and just one of many, many bearish fundamental factors that I foresee for the United States.
Yeah, yeah. Agreed. Thank you, Peter, for coming on. Where can people find more information about you and your services?
Well, Twitter is where I spend a lot of time now. Or we don't say what it was. I can't just say X. I find that very hard to say. See me at X. In fact, we used to joke as a kid, that guy's been X'd out. You know. But so Twitter, I still say Twitter. And there is a website, petergrandich.com. There's a blog there, and then there's also a YouTube channel.
Yeah. It sounds like a dark website or something.
Yeah, I just can't say X. I gotta still say Twitter.
Definitely. Well, thank you, Peter, for coming on. We always appreciate your time, and looking forward to the next time.
And Daryl, you keep up doing the good work, my brother. It's going to be a big challenge, and if they don't roll up the sleeves like you're doing, besides working for a living, they're pretty well not going to make it. I'm sorry to say that. So I keep up the good work.
All right, everyone, take heed to good advice.